In times like this, we normally expect that pharma and consumer goods, at least in a country like India where demand is still so much alive and kicking for consumption goods, would not go into the red. But actually the consumer durables index today is the third worst performing index. It's not a very good index, you will have to say. Often gets decided by Titan, which is such a heavyweight in that index. It's not very representative. But nevertheless, that index is down 3% today. Only the two other indices that are worse than that is capital goods and IT. So consumption also coming under pressure. What you would think would be a safe haven and a defensive at a time like this, at least for conservation of capital, if not to make money. On that note, let's get you an expert on that sector. Joining us from the Kotak Institutional Equities Conference is Manoj Menon, who tracks the sector very closely. Manoj, very good to have you on the show today. Well, first
good
up...
morning, Lata.
Morning. Let's get you first on the sector itself. Do you expect relative outperformance in this sector? Or do you think that along with the rest of the market, we are going to see some kind of nicks?
Put it this way, our base case for the next year is that we do not really see too much of earnings risks for the sector, as a whole. But having said that, there are two basic assumptions, which we have made. One is that, the commodities would behave, let's say, not being too inflationary from here on, because incrementally, it looks to be very difficult for most companies to take further price increases because the demand scenario, particularly on the discretionary side, is definitely not improving. And secondly, if you go by some small trends which came out of the first quarter performance, even staples, some of the volume growth, seems to have been lesser than what the companies have delivered in fiscal 11. So in that sense, if you look at it, overall earnings growth risk looks limited, assuming that, commodities don't get further inflationary from here. So that's point number one. But having said that, because the sector has been perceived as a safe haven, what we are finding is that the valuations have gone up indiscriminately across the sector, even for companies which has not really done well in earnings, without really taking names. So in that sense, there is definitely a risk for those companies to kind of, go through a correction. But I wouldn't really say that the sector, is really bad or anything at this point.
Manoj, can you hold on to that thought for just a minute? The Finance Minister is speaking in Parliament and he's speaking about divestment, so let's hear him out.
Of the guidelines and the policy thrust in respect of the disinvestment. And clearly, President in her address, after the new government came, spelled out the broad outline. I have also indicated here, though in the question hour we did not discuss the policy matters, only the facts are discussed, but as the question was put in respect of the policies, first couple of paragraphs are dealt with the policies and salient features of the policies are given there, and we have clearly spelled out that government holding will, under no circumstances, will come below 51%, at what level it will be decided, at what percentage it will be decided. All these are being worked out in consultation with the administrative ministries, various stakeholders. There is a group of ministers under my chairmanship which consult various stakeholders and concerned authorities, looking at the market condition, getting the assessment of the individuals who have reputation in this market, not merely the government authorities. All these processes are carried on before arriving at a decision. Thank you.
Tufani Saroj.
All right. Now that's an important news coming in from Parliament. Of course, this is a wise thing to do and not want to sell assets in a distressed market. Now those are pictures you have of Anna Hazare leaving Tihar jail and making his way towards Ramlila grounds, where he will start his 15-day fast. That's pictures coming up for you. We have nothing more to add to it. The pictures speak for themselves. But I think anything dramatic will happen only after the fast begins. So at the moment, let's get back to the markets themselves.
Indeed, Lata, still holding somewhere around that 48.50 mark.
Just a minute, can we get the ONGC share as well as the sale shares? Is there some impact that there will not be sales done in distressed times? If you can get those stocks up. Okay, there's a small nick higher, not very much at all. Well, let's shift focus to yet another event. The headlines just ran a while ago, like we were saying. An earthquake of magnitude 6.8 on the Richter scale hit the northeastern coast of Japan, and a tsunami warning has also been issued. We are speaking to Sayuri Daimon of Japan Times. He joins us on the phone line from Tokyo. Mr. Daimon, if you can tell us what is the kind of damage, if any, that the country has had to face?
Oh, you mean from this just earthquake that happened?
Mm-hmm.
Yes, actually the damage wouldn't be that much, even though it hit Fukushima, where there currently like ailing nuclear power plant is there. Right now the magnitude is 6.8, but I think they only had the small tsunami. It wasn't like the one that hit on March 11th. So I wouldn't say that the damage would be huge.
All right. Sayuri Daimon, thank you very much for joining us. It's nothing of the magnitude that earlier hit Japan. So thank God for small mercies. That's, of course, the more important picture coming in from outside Tihar jail, where Anna Hazare is raising slogans. All right, we'll keep you posted if there is anything more that happens over there that can impact the peace of Delhi and the country. All right, Manoj, sorry for that interlude. We were speaking to you about consumption stories. Would you say that at this juncture, given the current valuations of stocks like VIP and Jubilant Foodworks to begin with, where do you stand on both these stocks?
We don't cover VIP, so I don't really have a view on that. We do have a sell rating on Jubilant. That's purely on valuations, for the company. See, the fact of the matter is it's a company which has done about, let's say, 20% compounded growth in the same stores for the last, let's say, 8 years. In the last downturn, this company actually had a 0% volume same-store growth and a 6% reported same-store. Now, once you came out of the downturn, you actually had a situation where last year they had more than 40% same-store growth, and the first quarter they had about 37. So, we are looking at a company which seems to be cyclical, in terms of performance. So economic performance does impact them. But having said that, the valuations currently is supported by the performance. So it's a question of in terms of when the demand conditions could potentially turn for them. So in that sense, we find that the valuations are extremely rich for the company. Even though the performance in the near term continues to be good.
Mm-hmm. Manoj, hi, afternoon. Between ITC and HUL, which one would you prefer? And even on these two, do you see valuations at an exorbitant level that they would require some scaling down?
In fact, we actually like both the stocks. We had actually upgraded Hindustan Lever, 4 months back. We had a long-standing, negative view on the stock. We find Hindustan Lever as a turnaround story here. While the commodity end of their businesses, which is soaps and detergents, what I mean is, let's say, it's the performance kind of gets impacted, by movement in commodity. That's soaps and detergents to a larger extent. But however, the personal care part of the business, which has got pricing power, which has got the advantage of low penetration, so structurally the good part of their business actually is growing very well. And the company is actually investing in a lot of new categories, which can create tailwinds for the future, because most of these new categories, in our view, are, better gross margins than the blended gross margins for the company has got currently. So we find Hindustan Lever, the focus on volumes, investment for the future, etc., is to be a turnaround story, to something which you could look from a 2-3 year view. So we are definitely, positive on that. Okay. And ITC, we have been positive for a long time. It continues to be so. And on valuations, not really. Both the stocks are not really, gone into the zone where I would call it exorbitant valuations as yet.
I'm sorry, Manoj, we have to take your permission again and go to the Finance Minister. Some more statements.
Quite sometimes. In my earlier incarnation as Finance Minister, I signed number of DTAA, including that of Mauritius. so far TIEA is concerned, that is Tax Exchange Information Agreement. You have noticed two words have been used, one country and another jurisdiction. Jurisdiction means a notional concept has been created, a particular area in a country which is treated as tax haven, where the bank establish and they do not share any information. Or those who establish their units there, they are not to pay any taxes. These are called tax havens, like Isle of Man, Cayman Island, St. Kitts. They are not sovereign countries. International law, they are not treated as sovereign entities, but they are treated as sovereign regions, sovereign entities, so far taxation is concerned. Therefore, a sovereign country cannot enter into any agreement with them. What we do? Tax exchange information agreements. Earlier the practice was, I am little giving you the background, all the DTAs till before 2008, 79 double taxation avoidance agreements were signed. Not a single double taxation agreement had any clause for sharing banking information. The countries flatly refused to share this information, therefore it was not incorporated. After the financial crisis of 2008, at the London summit, followed by Pittsburgh summit of the G20 countries, when the
All right, that's important. Tax exchange agreements are going to be signed with countries with whom DTAs or double taxation avoidance agreements were signed, so that information can be got about entities who were getting into these areas purely to avoid tax or were doing treaty shopping. That's the explanation that the finance minister has given. Manoj, I'm sorry we've been interrupting you, but one last question to you. What is the other list of FMCG companies or personal products, staples that Kotak is recommending at this juncture?
Oh, very few of them, in fact, because we actually have a cautious view on the sector. So apart from Hindustan Lever and ITC, we would prefer, relatively Godrej Consumer, Glaxo and Marico. Out of the 14 stocks which we cover, nothing really other than that.
All right, we'll let you go back to your conference. Have a good conference and thanks a lot for joining us. All right, maybe we could go back to those pictures of Anna Hazare. Do we have anything important coming from there in terms of statements? All right, no, it is still sloganeering at this point in time, so we will take a break and get back right into the markets.